Do I think Tesla's in trouble? Short term, they may be in trouble because they may be making less money. But long term, this is a brilliant move on their part to gain more market share, to expose more people to electric vehicles, and to basically kill off a lot of the internal combustion engine competition they have. Hey guys, Omar Khan here from Theta Trading, and welcome to today's video. And the topic of conversation today is Tesla just cut prices in China. Are they in trouble? What does this mean for Tesla? What does this mean for the economy in general? Before we get on today's topic, if I can ask you guys a big favor, you can hit that like button, hit that subscribe button, and consider booking a call with us if you want to find out more about what we do. We work really hard on these videos, and we want to really promote financial literacy. Hitting that like button really helps the YouTube algorithm, so if you guys could do so, that would be greatly appreciated. So let's get on to today's topic. Tesla cuts prices in China. Are they in trouble? Well, let's take a look at a couple things, okay? So first off, Tesla cuts prices not just in China, but actually a few different companies. Let's take a look at this Reuters article, okay? Tesla cuts prices in China, other Asian market as sales falter. That means they cut prices in China, Japan, South Korea, and Australia. Now remember, those markets are fed largely by their most efficient factory, which is in Shanghai, okay? Shanghai produces enough vehicles not only for the Chinese domestic market, but for Japan, other Southeast Asian countries, Australia, etc., and South Korea. They have cut the prices. Now let's take a look at what this means. A couple weeks ago, Elon Musk went on and said that Tesla will sell every single vehicle that they can produce. What they will do is they will drop prices if they have to. And that is exactly what we're seeing happening today. Tesla has dropped their prices. Now let's take a look at the price of a Model Y here in China, okay? It says your Tesla slash prices of all of its Model 3 and Model Y cars in China between 6 and 13.5%. According to Reuters, calculations based on the website price. The starting price for a Model 3 was cut to $33,427 US. That means you can buy a Tesla Model 3 for $33,000. That same vehicle in the United States costs $47,000 almost. And the Model Y is at $37,700 in China. That same vehicle in the United States costs $65,000, right? So why are they cutting this market? Well, they're cutting the price. Why are they cutting the price? Well, they're cutting the price because they want to sell as many vehicles as possible. The more you sell of something, the cheaper it becomes for each additional unit that you produce. So they're going for volume. And a lot of what they're doing is also software-based. So the more vehicles they sell, the more likelihood they're going to sell full self-driving packages and other services that they have. And also creates brand loyalty. Now, what does this mean from an economic viewpoint? Why is Tesla cutting prices? Why do they have to? Well, let's take a look back at what happened in 2022. What happened was, in 2022, interest rates really went up a lot. And the reason they went up a lot is because inflation was very high for a long period of time. In 2021, the Federal Reserve was saying that inflation is going to be transitory, not a big deal. We're going to get past this. It's not a large issue. But in 2022, we found out that inflation is a big problem. And so what the central banks around the world have been doing is they've been increasing interest rates. When you increase interest rates, what happens? Well, now all of a sudden someone's mortgage costs more. Their car payments go up. There's economic uncertainty. They may lose their job. So are they going to be inclined to buy a new car? Or are they going to say, you know what? I'm going to wait. I'm going to keep my old car, and I'm going to just see what happens, and I'm going to get past this tough time. The latter is the more likely the scenario. People are just going to say, you know what, I'll wait it out. I'll see what happens. I'm happy to see how the economy unfolds here, and I'm not going to really get into buying any new stuff. So what Tesla has done is they are competing with a company called BYD, Build Your Dreams, in China. BYD has been having incredible sales in China, okay? Because they are at a lower price point. But what now Tesla has done is they have dropped their prices to very similar to what BYD is at. And if you consider how much they could make here from dropping their prices, it could be substantial. They could gain a lot of market share. Now, fortunately, Tesla is in a position where they can actually decrease their prices and still be profitable, okay? So we know that they're running roughly 30% or so gross margins. So meaning if they're selling a car for, let's call it $42,000, we know the cost of production on that car is about $30,000. So they were able to lower prices and still be profitable. Other manufacturers can't do this because they're losing money on every single vehicle they produce. Okay? BYD is barely making any profit whatsoever. Okay? So the economy is in bad shape. The consumer is in bad shape. But what Tesla has done is they're saying, you know what? We are going to drop our prices and we're going to drop them by a large amount. And that's exactly what they have done. Okay? So at the end of 2022, the subsidies that the Chinese government was offering to buy electric vehicles expired, right? So people bought a lot of their cars before that happened. But what Tesla did right after that, they started dropping their prices. Look at this. They dropped their prices by a large amount. Now, the market's not going to view that favorably. Why? Because the market's going to say, yeah, they're still selling cars, but they're selling at a lower price. What I want people to take note of here is during economic uncertain times, if you have to drop your price, it doesn't mean you're not still making a profit. It just means you're making less profit. So what they're doing is they are going in favor of volume. They're going to get as many units out as possible so that more people get to experience what it's like to drive an electric car, making it quite affordable at $33,000 US. And so that they build brand loyalty, they build volume, which means each unit produced will cost less. That is exactly what they're trying to do, and they're going to sell software down the road. Now let's get back to talking about what the economy in general is doing. The economy is not in a great position right now. Interest rates and inflation remain persistently high. That means people are going to be reluctant to spend money on whatever it may be because they're scared about their job, like I said. They're scared about, rising prices. And we've all felt it, right? You go to the grocery store, you go to the gas station, prices are higher for everything. Now, when prices are higher, people get nervous and they don't spend as much. But companies, they still have to keep selling their stuff. So what do? Well, what Tesla has done is they've cut their prices, and they've cut their prices quite aggressively. This will allow them to continue selling vehicles. And they'll make less per vehicle, but it doesn't mean their products are not in demand. At some point in time, some people are not going to buy gas cars. I look at this price here at $33,427 for a Model 3. And I think to myself, why would someone buy a Honda Civic or a Toyota Camry? It doesn't make sense to me, because if you can buy the same vehicle for only a little bit more, you're going to save way more in fuel savings over the next number of years. And on top of the fuel savings, you're going to save a lot more in terms of maintenance of the vehicle. I've now owned a Tesla for about almost 19 months or so. And I can tell you, I have 43,000 kilometers on my Model Y Performance, and I have done zero maintenance. No oil changes, no brakes, no anything. And that becomes a very sellable point. You start saying, well, is this something that other people are going to be attracted to? I would say the answer would be yes. So dropping this price down to $33,427 really allows them to compete with the BYDs of the world, and allows them to gain more market share. And if you want to see what's going to happen with these other manufacturers, you call it your Fords, your GMs, your Toyotas, they are absolutely getting obliterated. Think of how hard it was going to be for Ford to sell a Mach-E, their electric SUV, at substantially higher prices than Tesla selling for in China. It's going to be very difficult for them. And that's the way it's going to be. This allows Tesla to gain more market share. They're going to make less per vehicle, but they're not going to be out of business anytime soon. They've got about $22 billion in cash on hand to weather this economic storm. And like I said, they will sell cars at a reduced price as long as it means that their factories are producing at full volume. I will tell you this too, I expect a bit more price cuts to come from other countries around the world, namely the United States and Europe. if Model 3 is selling for $33,000 and change in China, and it's selling for $46,000 or $47,000 in the States, Model Y is selling for $37,700 in China, $65,000 or so in the United States. That means they have the ability to cut price in the United States as well. Now, again, this is going to affect margin, meaning the price they make per vehicle. The market is not going to like that short term. But long term, what are you doing? What you're doing is you're creating a company that produces a lot of vehicles, and the cost of those vehicles keeps coming down. Each additional unit you produce is going to cost less, because if you have already taken care of your fixed expenses, i.e. your factory expense, your property taxes, etc., well, you're not going to be paying as much per vehicle. So what they're going for is a volume strategy. But like I said, the economy is in pretty bad shape here. Let's see how much worse it gets. Do I think Tesla's in trouble? Short term, they may be in trouble because they may be making less money. But long term, this is a brilliant move on their part to gain more market share, to expose more people to electric vehicles, and to basically kill off a lot of the internal combustion engine competition they have. Guys, I hope you guys enjoyed this video today. Please consider liking the video, subscribing to our channel, and let us know what you'd like to see for future videos. I'm more than happy to create these videos, but I want to create them so that they're as meaningful as possible. Let me know what you'd like to see, and I'm happy to create it. Until next time, Omar Khan here from Theta Trading. We'll talk soon.